Hi, I am Anna. I come from www.ntvforex.com. Rates Spark whereas the floor analysis http ntvforex.com news ID 9CF6 FA 99 2020 12 28 17 PM. Rates markets are noisier in September. We think their downside is limited even on a further stock market sell-off. GBP rates strike us having the most downside of the lot. US rates are testing both sides. Risk-off favors tactical flatteners, fading to steepeners. Back to square one. The US elusive 10YR. Remarkably, the US 10YR ended the day yesterday back at levels seen just before Powell announced average inflation targeting. Price performance shows considerable resistance to material rises, even in the wake of a better-than-expected payrolls report. Right now, a cheapening in risk assets is facilitating a flow back into bonds. Before that, the elevation in the VIX as equity markets rose was a precursor to an eventual pullback in risk assets. That said, the bigger picture continues to show an underlying re-steepening of the curve. It's been subtle and far from convincing, but it remains the dominant impulse. We could well see more tactical flattening while risk assets struggle. But for as long as we have a combination of slowly improving macro data, a big supply requirement and the carrot of a vaccine potentially by November, there are enough reasons for flatteners to fade back to re-steepening. Rates are already priced for a dismal economic outlook. We started yesterday as Spark by saying that price action in September will be harder to read than in the previous months. We were, at the time, referring to sovereign spread, but this holds true for rates direction. Consider recent sessions. Rates plunged on a sharp correction in stock markets. We would not presume to offer views on markets other than rates, but the disconnect between until recently record high stocks and dismal economic prospects means the floor under risk assets could be very low indeed. The good news for rates investors is, the degree of economic optimism discounted on yield curves is a lot more modest. In fact, we have made the point repeatedly in the past that rates are consistent with protracted economic difficulties. This should limit their downside. It pays to consider different currencies separately, however. Brexit fighting talk, GBP rates take it on the chin. A quick look at 10Y swap rates in EUR, USD, and GBP suggests that the downside is most daunting for the latter. GBP rates in particular stand incongruously high when one considers the barrage of Brexit rhetoric ahead of crunch talks between the UK and EU. Markets yesterday seemed to wake up to that reality, with gilts outperforming other safe havens. This is all the more remarkable that this occurred the day the Debt Management Office sold A8BN15Y via syndication. Going forward, we would not be surprised to see another 10 BP of downside to 10Y GBP rates, as they appear most at risk to be affected by negative sentiment. Germany lose fiscals to remain name of the game. Also next year at the start of the month, the German government presented its interim economic projections. These provide the input for the working group on tax revenue estimation that convenes this week, with the results expected for tomorrow. The estimates again a crucial input for the 2021 budget proposal. Finanzschals is due to present to the cabinet on September 23. Handelsblatt reported that they could show a shortfall of A10BN next year and A36BN through 2024 versus the May estimate. Not as bad as feared, but the estimates do not include shortfalls in the Social Security funds yet. Last week newswires already cited internal finance ministry sources that at least A80BN of new debt was anticipated for next year, which explains why yesterday's comments by Scholz himself about significant new debt requirements might have left the market little impressed. Why his comments made at the same occasion that the EU measures constituted the beginning of a fiscal union had similarly limited impact is more surprising, but it might just be stating what everyone had assumed anyways. The main takeaway of the recent headlines, though, should be that Germany's fiscal stance will remain loose. That also gels with reports that the Eurogroup is to pledge this week that it is not the time to withdraw fiscal stimulus. The prospect of ongoing high bond issuance, when adding in also a potential terming out of this year's increased bills take-up, should keep steepening pressure on yield curves. Today's events: more supply. Today's data calendar is partially empty. The only exception is US JOLTS numbers. Supply should be more interesting. The US Treasury sells 10Y notes today, and 30Y bonds tomorrow. In Euroland, Portugal 10Y25Y and Germany 10Y make up the auction slate. Read the original analysis NBSP rates spark whereas the floor. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.